Good morning, team. Hope you are doing well. It is Thursday morning, January 8th, and I wanted to take you through 5 new trade ideas. Now, a couple of these were on the focus list over the weekend. A few of them I've added on because new ideas and new setups present themselves throughout the week. So I wanted to walk you through each one of these names. So first up is BTU. This is Peabody Energy, obviously in the energy space. So the energy trade since the incident in Venezuela, I think is going to be pretty hot. This is an excellent setup. Basically, ascending triangle. So you've got a flat top and you've got a series of higher lows, right? And so you get this kind of contraction and momentum building up. You could see the squeeze setting up, firing, setting up, firing, setting up, firing. To me, that just tells me that momentum is building up in this name. Now, we did get the breakout yesterday. This morning, we got a back test. So what I don't want to do is buy the breakup out here. What I want to watch for is, do we get a back test of 3151? Even you could say like maybe halfway down the pole, you could probably take a trade as well. And I would keep my stops under that candle, under yesterday's candle, because it looks like we're building or setting up with an inside day. So just be mindful of that. I'd much rather get an entry closer to down here than up here, because if you're up here, a lot more risk. Yes, you can move up to 36, which is your prior highs, but the risk to the reward to me wouldn't be worth it. I'd much rather keep, an entry here and my stop down here, and then we have 33 and then 36 as your targets to the upside. So that's the first one. Next up is PGNY. So very similar setup. I didn't label this, so let's just go ahead and label this now. This is an ascending triangle. And you could also see the squeeze is starting to set up here as well. So what I'd love to see here, very simple. I'd want to see a rejection off that top here, one more pull down, or maybe even 2 more pull downs, and then your breakout. So what I'd watch for, moving average cloud back test, I would take the trade here, maybe around $25.50 to $26. Sometimes you get an undercut, watch for the undercuts, and then the recapture. That's also a great area to take a trade there. You could also do this in multiple steps, right? If you're taking shares, and I always use a round number of 100 shares. So let's say you take, 100 shares total. So maybe you take 30 there, 30 on the breakout, and then maybe 30 or 40 on the back test. That's just one way that I like to kind of enter a trade when it comes to shares, right? I do it in 2, sometimes 3 parts. So the back test, the breakout, and then the second back test bounce, right? So that could be 1 add, 2 add, 3 add, and now you're in your full position. So that's what I'd be looking for here. Back test of the moving average cloud, break of the neckline at 27.47, and very similar, right? So you have a high, a similar high, a similar high, a similar high, but then you've got a low, a higher low, and another higher low. And what I'd look for here again is another, like your 4th higher low, and then the break, right? And the squeeze is setting up, so that's on our side. If we can get maybe another 3 to 4 days of TTM squeeze building up, and then we get the breakout with a fire, that's what I would love to see. That's a beautiful trade. All right, next one up is EJAN. This one, initially I thought it was going to be, I think initially I had labeled this as an inverse head and shoulders, right? So left shoulder, head, right shoulder, but then we kind of put in another right shoulder. So to me, this is looking more like a VCP, which is a volume contraction pattern. And it looks similar to, an ascending triangle, right? You're getting a low, a higher low, a higher low, but you're getting these cup kind of bases, right? It's not like the prior ones where it was almost just like a perfect triangle. This is more like cup base, cup base, cup base, and we're right at the neckline. I have after hours on, so this is, let's see, it is 6 o'clock in the morning, and we had an outside day yesterday, and then a fail at 1097. So for me, very similar, very similar. Anything I would say from 10 to 1050 is a buy, using a stop under around 945. But then your reward to the upside's around 1335, right to that 618. So you've got just about a 30% upside with maybe 5 to 7% downside. So 3 to 1, 4 to 1 risk to reward ratio. I think that looks great, and a very similar strategy in terms of entering, right? If you get another pull down into the moving average cloud around 1025, you can add there, right, and build a position. If you get like low volume inside day, like here's the low volume inside day right there. It's not showing low volume, but I could turn volume on, right? So look at here. Where was it? Right here, right? Low volume inside day. Look at how this is a 14 weighted period moving average on volume. Anything below it is below average volume. Anything at it is average, and anything above it is above average volume. Now you're starting to see above average volume, right, on yesterday's candle. So just be mindful of that, right? So that sometimes that's a little bit of a clue that it's, ready to kind of attempt to break out. So keep a close eye on EGAN over 1097 and into the moving average cloud. Next one up is CCCX. This is Churchill Capital Corp. I think this is a SPAC, if I'm not mistaken, but don't quote me on that. All right, so this one, cup and handle, right? So there's a pretty clearly defined cup. There's your handle. You could even look at this as a left shoulder, double-headed monster, right shoulder. So it could be an inverse head and shoulders as well. I don't think the rules don't really change, right? Your measured move is always going to be the base of the head to the neckline, right? That's probably going to bring us to around 24.39. So regardless of what the setup is, whether it's an inverse head and shoulders or a cup and handle, the rules still apply, right? So in the handle, right, your first buy is on the break of the handle, which was right here. I think your second buy would be off the rejection. You want to pull back down into the moving average cloud. Probably second buy was yesterday. This one had an above average volume inside day. That's not what I would consider a buy. I would look for low volume inside day. So look at this one right here. Low volume inside day on the right side of the cup. And look at the low volume here. Even both of these days, right? Inside day. It looks like it might have been a double inside day. Then you got an outside day, and look at the breadth expansion here, back up to the highs. So just a couple of ways to look at it. You even have it back here too, right? Here's another low volume inside day there. There's another low volume inside day there. To me, these are all opportunities to buy and accumulate and build a position inside of a tight base, right? And if you were to build, let's say, inside that tight base, in here, well, you're getting rewarded on the breakout, the back test, and then the bounce. So a lot of different ways you can do this. Now, this didn't come on my radar when it was back here, so I didn't see it. And this is where we are today. And so this is what we deal with, right? But regardless, I think stops under here. But if you take the trade up here, stops under here. And 20, 26, 21.96, 24.39 would be your targets to the upside. And then you could potentially see a move up to the previous highs at 27.49. All right, last but certainly not least, OUST. Again, looks very similar, right? A lot of these setups are looking similar. This is kind of my edge. I like to buy these reversal patterns, cup and handles, inverse head and shoulders, volume compression patterns, ascending triangles. Those are the four reversal patterns that I like to look for. There's always continuation patterns like your bull pennants and your bull flags and things like that. And those are also great. But these are more reversal patterns. And so what are we looking at here with OUST? Well, right now it is a cup and handle. Very clear, right? You don't get a left shoulder here, so it's not an inverse head and shoulder. This is a very clear cup and handle. And two ways to play this, right? If we get a pull down into the moving average cloud, that could be an area to buy on strength off of a bounce. Second area would be the break of 26.38. That's this idea, right? You can buy maybe 50% of your shares there, 50% on a back test if you get that bounce, right? So that's one idea. Or this could be setting up as a volume compression pattern, or volatility compression pattern. And that would be something like rejection off the neckline and then building another tighter base here. And in that case, I would probably look for some sort of flag or pennant being formed here, right? And then you could buy early here, right? Maybe 50% of your shares, and then here, 50% of your shares. Now, I've been talking about shares this whole time. Of course, you can trade options. In these types of patterns where the base is still being built out, you want to buy at least minimum 3%, 3 months out, 10% within the strike of price. So for this example, like I wouldn't go further out than like $26 or $27 strikes, depending on what they offer on the options chain. The other thing I would think about is there enough liquidity? Is there a lot of volume, right? Is open interest and volume high? If that gives you enough liquidity, then yeah, you could trade options. But if there's not enough liquidity, then it's going to have a harder time getting in. You're going to have a harder time getting out. Much rather go with shares over options in that case. So, all right, hopefully this was good. I'm going to try and do more of these videos throughout the week just to kind of explain the setups, explain my thesis in the trade, and show you a couple of different ways that we can take the trade. There's no right way or wrong way to take the trade. There's only a wrong way to exit a trade, and that's to hold on to a failed trade, right? So just keep that in mind. If you have any questions, of course, just leave comments down below, and happy to see some of these play out. And again, it really depends on how the market plays out too, right? If the market is going to continue to be strong and move higher, some of these names are going to break out and have nice continuations. But if the market continues to get choppy and fails, then some of these names, if not all of these names, are probably off the board, and just wait for the proper setup before taking your entries. All right, take care, everybody. Have a good morning. Have a good day.